Welcome back to the Deep Dive.
Hey there.
So today we're diving into, well, a really high-stakes situation playing out in early 2025. It's this kind of economic tug-of-war.
Right, you've got the White House, specifically President Trump, pushing really hard for the Federal Reserve to cut interest rates.
Like flooring the gas pedal.
Exactly. But then you have the Fed chair, Jerome Powell, sort of tapping the brakes, looking pretty concerned about the road ahead.
And the big bump in the road, these major new tariffs Trump put in place.
That's the core of it. We've been looking through a report analyzing this clash.
Yeah, and it's this weird chicken and egg thing, isn't it? Tariffs need offsetting, or do rate cuts fuel problems caused by tariffs?
It's a fundamental question. How do these big policy levers, trade policy and monetary policy, interact? And, crucially, what does it mean for you, for the listener?
Right, because this isn't just theory. It affects, inflation, jobs, the whole economic climate, stuff that really matters day to day.
Absolutely. So our goal here is to really unpack this. Look at Trump's arguments, Powell's perspective, the potential economic impacts.
And just try to get some clarity on what's actually going on. Okay, so let's start with Trump's angle. Why is he pushing so hard for these rate cuts?
Well, his core argument seems to be that these cuts are like jet fuel for the economy. He thinks they're needed to counteract any negative effects from his new, pretty large-scale tariffs.
So the tariffs might slow things down, and he wants the Fed to step in and speed things back up.
That seems to be the logic.
Yeah.
And he's pretty dismissive of inflation risks. The report quotes him saying, virtually no inflation.
Wow. And he even called Powell a fool on Truth Social for not cutting rates already.
Yeah, very direct criticism. It suggests he believes the Fed is missing a big opportunity for growth and that lower borrowing costs can somehow just cancel out the price hikes from tariffs.
His view seems to be, look, the tariffs help American jobs, and the rate cuts keep the economy humming along despite any headwinds from those tariffs. A two-pronged approach, maybe?
That's how it's framed. But what's really striking, and kind of unusual, is that he's essentially asking the Fed to preemptively fix potential problems caused by his own policies.
That does seem odd. Usually you react to economic data after a policy hits, right?
Typically, yes. This is more like demanding an antidote before you even know if the medicine has side effects.
And this isn't new territory for him, putting pressure on the Fed. He's talked about firing Powell before.
Exactly. The report mentions that history. This public pressure really tests the idea of the Fed's independence, which is usually seen as crucial for sound economic policy.
Yeah, that independence is supposed to keep politics out of interest rate decisions.
Right. And Trump even labeled April 2nd, 2025, when the new tariffs hit, as Liberation Day in America. He clearly expected the Fed to deliver a jolt to the economy right then.
Okay, so that's the push from the White House. Now let's flip to Jerome Powell and the Fed. What's their perspective? It sounds much more cautious.
Very much so. Powell's operating under the Fed's dual mandate: keep inflation low and stable, and keep employment high. From his viewpoint, these big tariffs are a major source of uncertainty, a wild card.
He's worried they could actually hurt the economy.
He's been pretty explicit about it. He acknowledged that sustained, large tariff increases are, and I'm quoting here, likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment.
That covers all the bases, doesn't it? Inflation, growth, jobs, the Fed's whole dashboard flashing warning lights.
Pretty much. The worry isn't just, imported TVs getting more expensive. It's that businesses pass on those costs, workers demand higher wages, and you get this broader inflationary pressure building up.
So what's the Fed actually doing? Sounds like they're holding steady for now.
Yeah, they've kept interest rates in that 4.25 to 4.50% range. It's a wait-and-see approach. They want to see actual data on how the tariffs are impacting things before making a big move.
They need to see the evidence first.
Exactly. Powell did say they might act potentially aggressively if needed, but only after assessing the real impact. Are prices really taking off? Is hiring slowing down? They need answers.
Powell also mentioned the idea of transitory inflation. What does that mean in this context? Like, the price hikes might just be temporary.
That's the idea. He's suggesting the initial hit from tariffs' higher import costs might be a one-off adjustment, a shift in relative prices, not the start of a persistent economy-wide inflation surge.
So if it's just temporary, the Fed might not need to slam on the brakes with rate hikes.
Right. They might be able to look through it, as economists say, especially if it's cost-push inflation, rising production costs rather than demand-pull inflation, where too much money is chasing too few goods. The Fed's tools might work differently for each.
So Powell's walking a tightrope, He needs to be ready if things go south because of the tariffs, but also avoid overreacting or looking like he's caving to political pressure.
Precisely. Protecting the Fed's credibility and independence is huge. Remember the market jitters when Trump previously talked about removing him?
Yeah, markets hate that kind of uncertainty about the Fed.
Absolutely. If people lose faith that the Fed will control inflation, it can destabilize everything. So Powell's emphasizing data-driven decisions, not political ones, despite the noise from the White House.
And the fact that the economy overall has been pretty resilient, low unemployment, okay consumer spending that gives them some breathing room to wait.
It does provide some justification for being patient. Powell basically said monetary policy shouldn't get whipsawed by trade policy changes, which can be unpredictable. He wants to see the real trends.
Okay, makes sense. Now, what about other economists? I imagine they have opinions on this.
Oh, definitely. And they're not all singing the same tune. You've got some very strong critics of Trump's approach.
Like who?
Well, Dr. Jeffrey Sachs, for example, he didn't hold back. The report mentions him calling Trump's tariff logic improvised, absurd, and so basic. He even used a Mickey Mouse analogy.
Ouch. So what's the main worry for economists like Sachs?
The core concern is that the tariffs will just do more harm than good, period. And the idea that the Fed can just magically fix it with rate cuts is, in their view, misguided and risky.
Risky how?
The big fear is stagflation, that nasty mix of rising prices and slowing growth. Tariffs could push prices up while also hurting business activity.
And if that happens, the Fed's in a bind, right? Cut rates to help growth, you might fuel inflation. Hike rates to fight inflation, you could kill growth.
Exactly, but it's a policy nightmare. And these critics argue that if the Fed gives in to Trump and cuts rates when inflation's already rising because of tariffs, they'd essentially be abandoning their 2% inflation target and risking long-term stability for maybe a short-term boost.
But not everyone agrees with Sachs, presumably. Are there economists who see it differently, maybe more aligned with Trump, or at least arguing for the Fed to accommodate?
Yes, there are. People like Larry Kudlow, who advised Trump previously, argue that the inflation fears from tariffs are overblown. They think any price increases will likely be transitory.
That word again. So Kudlow's argument is that even if tariffs raise some prices, it won't lead to broad inflation.
Right. The thinking is consumers might just shift their spending. If imported widgets get expensive, maybe they buy fewer widgets or buy domestic ones or cut back elsewhere. So overall spending, and thus inflation, might not rise much.
Okay, so a shift in spending, not necessarily more spending overall.
That's one argument. Plus, they might point to things like global competition and technology always pushing down on prices, potentially offsetting the tariff impact.
And what's their case for the Fed cutting rates now?
They'd argue it acts as a cushion. If businesses get nervous about trade uncertainty and think about pulling back on investment or hiring, lower rates make borrowing cheaper and might encourage them to go ahead anyway.
So it's about boosting confidence and investment despite the tariffs.
That's a key part of it. Plus, you hear from Trump allies that they felt the Fed was too tight before anyway, and that current inflation, maybe around 2.7, 2.8%, isn't dangerously high. They think there's room to cut rates proactively to support jobs.
So really different takes on the risks and the right path forward. It really highlights the uncertainty here. Let's dig into those specific economic factors everyone's watching. Inflation, jobs, and the stagflation risk.
Okay, inflation first. We know it's rising prices, eroding your purchasing power. The Fed wants it around 2%. We're currently a bit above that, maybe 2.7, 2.8% for core inflation.
And tariffs push that up by making imports more expensive.
Directly, yes. But the big question, as we've said, is whether that spills over. Does it become a wider, more persistent trend? Trump says no big deal. Powell is clearly watching it carefully.
And for you listening, it's about how much your money buys week to week.
Exactly. Then there's employment and growth. The job market's been strong, historically low unemployment.
And Trump wants to keep it that way, seeing rate cuts as the tool, even with tariffs.
Right. His priority seems to be maintaining that strong jobs picture. Powell also wants maximum employment, but he has to balance it with inflation.
And right now, the Fed seems to think the job market is okay, steady growth, moderate wage gains, so no urgent need to cut rates just yet.
That appears to be their reading. But there's always that risk way too long, and you could choke off growth. But cut too soon, and inflation gets worse.
Plus, the tariffs themselves could be a mixed bag for jobs, couldn't they? Help some industries, hurt others?
Definitely. Protecting one industry might raise costs for another that uses imported parts. Or other countries retaliate with their own tariffs, hurting U.S. exporters.
So your job security could really depend on which sector you're in and how these tariffs shake out.
Precisely. It's complex.
Which brings us back to stagflation, the scenario everyone dreads.
Yes, stagnant growth plus inflation. Awful combination. Powell's cautious approach is largely about preventing that. He explicitly warns sustained tariffs could lead there.
And Trump's critics are basically saying his policies might accidentally cause it.
That's their central fear. Tariffs drag growth and fuel inflation. And pressuring the Fed to cut rates just makes the inflation part worse without fixing the growth problem. The stakes for the whole economy's long-term health are really high.
So wrapping this up, it really feels like watching an economic chess match, doesn't it? High stakes between Trump and Powell.
It really is. A clash of strategies, maybe even philosophies. Trump pushing for immediate growth, more aggressive tactics. Powell focused on stability, long-term health, a more measured approach.
And the results of this match directly impact listeners' mortgage rates, job prospects, prices at the store, your financial security, basically.
And there's just so much uncertainty. We don't know the full impact of the tariffs yet, or exactly how the Fed will react down the line. It's that chicken and egg dynamic again.
It's interesting, too, that, both sides say they want a strong economy. They just completely disagree on how to get there.
Fundamentally different approaches. And Powell's been pretty stoic, hasn't he? Just sticking to the Fed's mandate despite the constant pressure.
While Trump keeps insisting on those rate cuts. So looking ahead, what should people be watching? Key indicators.
Definitely keep an eye on inflation reports, the monthly jobs numbers. Also, any news on trade policy itself, like that UK trade deal mentioned in the report, which eased some tariffs and slightly shifted market expectations about rates.
It's just historically unusual, this level of public presidential criticism of the Fed chair. Powell's navigating tricky political waters.
It really is unprecedented in recent times. It boils down to these huge questions. How do you keep the economy growing without letting inflation get out of control? How do you adjust trade policies without hurting your own people?
The answers really matter for the country's long-term prosperity, a critical debate.
Absolutely.
Okay, so thinking about all this, what are maybe some bigger picture insights for our listeners, the Deep Dive Cuttlefish community, especially around investing? How might these forces play out?
That's a great question to ponder. With potential inflation from tariffs, you might think about assets that tend to do okay when prices are rising. Inflation-protected bonds, maybe certain commodities, some types of real estate historically. But again, just thinking broadly.
And what about growth slowing down or the Fed's actions?
Right, that uncertainty impacts different sectors differently. Industries sensitive to interest rates, housing, cars, big durable goods could feel Fed moves more directly. And trade policy itself, well, you need to think about which specific industries might benefit or suffer from tariffs or retaliation.
So it's not specific advice, obviously, but about understanding the landscape.
Exactly. Understanding these crosswinds, inflation risk, growth worries, Fed policy, trade impacts can help inform how you approach your own financial planning and investment strategy. Being aware of the potential scenarios.
Makes sense. And we definitely want to hear from you, our listeners. What did you think of this? Any aspects particularly interesting or things we missed?
Yeah, are there other parts of this Trump-Powell dynamic or trade and monetary policy in general you'd like us to dive into next time?
Let us know in the comments. Your suggestions really help shape what we cover here.
Absolutely. We love hearing what's on your mind.
And if you found this useful, please do subscribe to the YouTube channel, Deep Dive Cuttlefish, for more deep dives like this one. Thanks for joining us.